The trading week is coming to an end, but investors still refrain from buying risky assets. Yesterday's ECB meeting unfolded calmly as expected. Traders are voicing concerns about the escalation of the conflict between Washington and Beijing. The US dollar index was trading sideways near the 96.30 level. Yesterday, statistics from the US turned out to be controversial, which forced traders to refrain from active trading. The US unveiled a strong retail sales report, whereas employment data was rather gloomy. Initial weekly jobless claims came in at 1.3 million. The figure is worse than the forecast, which indicates the continuation of the wave of layoffs in the United States. The stock market incurred losses amid this news. Additionally, the rising tensions in the US-China relations are also weighing on the US stocks. Yesterday, US Secretary of State Mike Pompeo brought up the topic of the introduction of new restrictive measures against China. Trump's administration is considering banning Chinese Communist Party members from entering the United States in response to the introduction of the Chinese national security law. Pompeo also accused the Chinese authorities of hiding information about the danger of the coronavirus. Pompeo called on other countries to increase pressure on China and revise their relations with this country. Investors now fear the resumption of the US-China trade war. Likely, Beijing confirmed its intention to adhere to the terms of the first phase of the trade agreement. Yet, it's ready to retaliate against Washington's actions if needed. Compared to the stock market, the forex one is less vulnerable to market jitters. The dollar-yen pair continues to fluctuate in a fairly wide range for 10 days. Besides, we have made some adjustments to our previous forecast due to market uncertainty. It seems that the bulls will take full control only if the pair breaks through the level of 107.77. However, if the pair falls below 106.68, the bears will take the upper hand. The trajectory of the AUD-USD pair is unclear. On the chart, we can see the formation of a triple divergence and the probable resumption of the upward trend. It may come true if the pair rises above 0.7000. However, there is a signal for a drop below the 0.6900 level as well. Fundamental analysis experts predicted the downward movement of the pair. They think that the RBA will take a dovish stance on the monetary policy amid a worsening labor market situation. The Australian-China conflict will continue to escalate. All these factors are certainly bearish for the pair, therefore it's better to refrain from trading today. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.